Hello and welcome into the What's Up Peoria podcast. I am your host, Nathaniel Washburn, back with another episode for you so you know what's going on in the city of Peoria. And I am very excited because we are kicking off the first episode of our second season. If you joined us last week, you got to see or hear the live Facebook feed that we had for our 1-year anniversary special. We had the city manager on. It was a fantastic interview. We had a live mariachi band that joined us. It was a great episode. Please go back and listen to that if you have not had a chance. It was a fantastic interview with Henry Darwin, and he was great. And I am so excited because we are kicking off season 2 of What's Up Peoria. And again, our goal here, if you're new to the podcast, is just to give you the information you need so you know what's going on in our city. And on top of that, I always invite in a special guest to come and talk about something going on in Peoria, whether it's a business that's opening or, you know, having a guest who works in the city who can give you insight into what is happening in the city. But we always try to give you something so you know what's going on in Peoria, around Peoria. And the guest is always a big part of that. And today is no exception because I have a special guest in studio. And I'm really excited about this because right now, on everybody's mind are interest rates. And I have gone out and I brought in an expert in this field. And my guest today is a vice president. He's a branch manager at Nova Home Loans. Michael Engelking is joining us this morning. Michael, how you doing?
I'm doing great.
Awesome. Thank you so much for joining us, Michael. Michael's going to take us through some things you can do if you're looking to buy a house, or if you currently own one and you want to, you know, maneuver some equity. Michael is an expert in this area. He's going to be able to walk you through some things you can do. He's going to make himself available as well. So if you want to reach out to him to get some advice, his advice is free, right? Your advice is always free?
Absolutely.
Advice is free. So if it's free, take 3. Get 3 different things of advice from him. No, I'm kidding. But it honestly, if you have questions, Michael is the guy to reach out to. He's the guy that will take care of you. And he's going to walk us through some things that you can do with your current situation. So I'm excited about having Michael on, and I appreciate his time this morning. So I want to remind all of you, all the loyal listeners out there, thank you for continuing to download the podcast and being a part of what we're doing here. If you want to reach out to us, we do have a email address. It's whatsuppeoria@peoriaaz.gov. That's whatsuppeoria@peoriaaz.gov. I've had many people reach out. I've had people who are trying to start their own podcast reach out. So that's really cool. I'm excited about that. And as always, just to remind you, you can pick up this podcast on Spotify, Amazon Music, iHeartRadio, Pandora, all of those places. So again, thanks for tuning in. Thanks for being a part of what we're doing here. Tell your friends, tell everybody, this is the place to be. This is where you're going to get all the information. So to kick things off, October is a busy, busy month, and we're starting tomorrow, October 7th, 5 to 8 is Gain, and that is happening at Pioneer Community Park. And if you don't know where Pioneer is, I'll give you the address real quick, 8755 North 83rd Avenue. It's off of Olive, and it's a great, beautiful park. You can go there tomorrow night, and what you will get with Gain is a chance to reach out to those public safety officials that work in our city here, PD and fire. They are going to be there. The library is actually going to be out there too, so you can stop by and say hi to us. But go to Gain. It is a great way to connect with the people who keep us safe in this city. If you have questions, if you just want to meet, if you want to take the kids out, it's a great event. Gain happening tomorrow, October 7th, 5 to 8 at Pioneer. The following Saturday on the 14th, I'm very excited about this one. We got Fall Fest right here at the library, 10 to 1. It is a carnival style, so there's going to be themed games, a pumpkin giveaway, food trucks, crafts. There's going to be a ton going on. You want to be at the main library for this. It is always a good time. The weather looks like it's going to cooperate with us, so we're going to have a really nice day. We want you to come out and enjoy Fall Fest right here at the library, main library, from 10 to 1. And on the same night, Second Saturdays are kicking off 5 to 9, and that is in downtown Old Town Peoria. So if you have never experienced the Second Saturday, it is free music. It's fun. It's an art show. They're taking it up a level this year. I saw the list of musicians they're bringing out. It's fantastic. So you can go on the website to get more information about those musicians who are coming out. But you're going to want to hit Second Saturdays. That's October 14th, Saturday evening from 5 to 9. So check out Second Saturdays. The last thing I have for you, it's I can't believe it's 3 weeks away, but the Halloween Monster Bash. This is the huge thing that happens at the end of October every year over at the Peoria Sports Complex. This year, it's going to be fantastic as it always is. This is October 28th. It's Saturday, 5 to 9. There is going to be a costume contest for different ages. There's going to be a BMX show that's going on, interactive wildlife exhibit, the Dino Crew, inflatable slides, a green screen entertainment. I could go on. The list here is huge. There's also a sensory room for those people that may need to take a break and calm themselves down or find a quiet place just to sit. So they'll have their sensory room out there as well. It is going to be such an awesome time. It always is. It's great for the kids. And again, Saturday, October 28th, 5 to 9. You're going to want to make sure you make your way out to the Peoria Sports Complex for the annual Halloween Monster Bash that is going on there. So, like I said, crazy. October is jam-packed with stuff. It is always nuts in October when the weather starts to cool down. You know that everybody's coming outside, and in Peoria, we happily accommodate you with all of those things that we're trying to do with our Fall Fest, Monster Bash, Gain, so many other things. So make sure you check websites too for times and dates of other events going on. But those are the big events happening that are going to be happening in the next few weeks here. And so make sure you make your way out to those awesome events. So with that, let's shift gears a little bit. Let's go back to Michael. Michael, thanks for waiting. I appreciate that.
Oh, my pleasure. That was good information.
Hey, thank you. I appreciate that. That's what we try to do here. So I want to start out. You are a Arizona native, and so you lived here your whole life. You're really familiar with the Arizona market, correct?
Right. And before we get started, I do want to thank you for having me. And I think this is an amazing service that you offer the community, and it's an honor to be here.
Thank you. I really appreciate that. Thanks so much. And Michael and I have known each other a very long time, and we go way back. And I can tell you that Michael knows what he's talking about, and you're going to want to listen to him here because he's got great information. But you are from here. You know this market inside and out, correct?
Okay, so we need a little bit of clarification and background on that because I typically tell people I'm a native, but
here comes the big confession. Everybody, listen up.
Okay, but I was born in Washington State.
I didn't know that.
Right?
I've known you for like almost 30. I didn't know that. How did I not know that?
Because I was 3 months old when we came here.
Oh, see that doesn't okay. That doesn't count.
I know. I just didn't want anybody trying to do some background.
See, they're gonna fact check it like Michael's lying.
Right.
Okay. Hey, I see right off the bat the honesty. I love it.
That's
so
right.
you were born in Washington State.
Yeah.
You moved here.
Yeah. Oh, that was a tough drive too. I remember it. No, just kidding. But my family had a nursing home back in Washington. My parents and they came out to Arizona for many different reasons. But I was raised here. Different parts of the valley. Went to ASU.
Yes, go Devils.
Go Devils.
That's awesome.
And while I was at ASU, my father was working as a loan officer for a company, and he had been in real estate and mortgages his entire career. And so I was always around it, but I didn't really know what it meant until I was at ASU and I became his assistant.
Oh, okay.
And I used to go out to people's homes for him and take the mortgage application at their kitchen table on paper when we used paper.
What? Paper?
Yeah.
Oh, the in the olden days, right?
Right. Yeah. Yeah. If there was go to the website, I wouldn't have even had a position. Who knows what I'd be doing?
You would have been out of a job. Go to a website. We don't need Michael anymore.
Right.
All right. So you took applications, you did all that. You kind of learned the business then.
I learned the business directly from him. And then when I graduated, the company where he was working just allowed me to come on, because he was there kind of supervising.
Yeah.
So that was my beginning in 1996.
Holy cow.
Right.
So you have been doing this a long time. You know this market. Obviously you got in early, right out of college. You were doing this in college. You were doing this and then right out of college. And you're learning the business, right?
Right.
Yeah.
Yep.
And how does that go for you?
Well, it was tough at first, because rates were in the 9s. You think rates are high now? We'll talk about that, but they were in the 9s, and people were still buying. But it was a little slow at first, and because I looked like I was 14 years old, it was really hard to get business. So
he still looks like he's 14. Everybody, just so you know.
But what I would do is I would just I would send little flyers. I'd fax them to realtors.
I love it. We're talking about faxing and real paper applications.
Right. And all my flyer would say on the fax was horrible credit, ? No problem, Mike. And it would have my beeper number on it.
Oh my gosh. This story is so good.
So that's what I had to do to get mortgage business. And so because of that, we got really good at working tough loans too and figuring out how to make deals work, because the realtors weren't going to send me their top clients at that time.
Of course not. Mm-hmm. And so you obviously in that market, you have to really work at working for your client, working for the people who are trying to get their first home, trying to, maybe get out of a bad situation, whatever it might be. And so you kind of learn all this going through, and we find ourselves today where we're at with these mortgage rates that are rising. Mm-hmm. And it's, we've had, and you probably know this better than I do, but we had such a long period of really good interest rates. What was that run? It felt like 10 years.
Well, this week we actually it's 23 years since we've had this rate at 7.69%.
Okay. So 23 years. 23 years. There's this huge run of historically low rates. Mm-hmm. And a lot of people are buying, housing market's coming back. I know obviously 2008, that time mm-hmm. was rough, but bounce back, right? And so for a while we've had these great rates where people are, and now we find ourselves with what you say 7.6.
7.69 is the average nationally, right? Mm-hmm.
And so my next question for you is, I'm a first-time home buyer. I want to move into Peoria. We all know how great Peoria is. It's a great place to live. It's a family-oriented place to live. Tons to do, work, play, stay. That's what Peoria is about, mm-hmm. right? So how can I do that with a rate like that? What is out there for me?
Well, a lot of the times people still qualify with the rate.
Sure.
We're a little spoiled because we see all these people. As a first-time home buyer, you maybe have seen your friends or your family, get a 3% interest rate.
Right.
And so it's just mentally you think that, you can't do it now because the rates are 7.5%.
That's a great point.
Right. But that doesn't mean that you don't qualify. So, there are some strategies to actually have a lower payment and effective rate at first. And that's called a 2-1 rate buy down. But, the first thing that people do is they find out with their income what house payment they can afford.
Right.
Okay. And there's going to be times when, because of where rates are and where the values of homes are, that they may not qualify for what they need for their family. That does happen.
That's a reality. And I appreciate you saying that, because you're not coming on here blowing smoke, right? You're being honest with people. And I think that's what people want. Let's be honest with them. Sometimes you're not going to get the house that you want or the size of the house that you want because the rates just don't allow it right now.
That's right.
But there are other things you can do.
There are. So what we're seeing, if a typical home buyer comes in, first-time home buyer, and they have limited cash, there are down payment assistance programs.
Okay, excellent.
Okay, and you don't even necessarily need to be a first-time home buyer to use these down payment assistance. Okay. So we will look at those and we'll see what you qualify for. And when it comes to credit, you don't have to have perfect credit. A lot of these are FHA loans, Federal Housing Administration loans. Mm-hmm. They're backed by the government. And in some cases, you can get down to a 580 credit score and still have minimal down payment. So you don't have to have perfect credit.
Right.
And so what we'll do is we'll look at your income and the credit, and we'll see if you qualify for one of these programs that offer assistance. Okay, which
Fantastic.
can cover some of the down payment, all of the down payment, sometimes some closing costs. Okay.
All right.
And then if we are running into a debt to income ratio problem on the affordability side,
Right.
we are seeing more people actually buy with somebody.
Oh,
Right. Like some maybe friends are joining forces.
interesting.
And they're looking at it as an investment
Sure.
together to get their foot in the door.
Sure.
Right. Because, and also, let me just add to that, the people are having their families co-sign sometimes too.
Right. Right.
Okay.
And that may be what you need, depending on where you're at in your life.
Right. And it doesn't have to be forever.
Right.
I mean, we've seen people do this in the past, and then we refinance that parent off of the loan later.
Right.
When interest rates come down, right?
Sure.
Then they don't need that additional income. I think the important thing is waiting is not the solution.
Okay.
Like waiting for rates to come down, waiting for values to come down is not really a good move.
Okay.
And here's why. When interest rates come down 1%, it brings 5 million new qualified buyers into the market.
Wow.
Right. And we already have an inventory issue.
Okay.
Like it's like
Wow.
if you're out there looking for a home right now, it's not that easy.
Yeah.
Even if you qualify, like it's
You
there's
can have
just-
all the money in the world, but if the home that you want isn't available because there's so many people that want that house,
yes.
now you're all bidding against each other.
Right.
And now you have to pay more.
Exactly.
Okay.
So inventory is low. So when rates come down, people that are waiting to buy something when rates come down they could be shooting themselves in the foot.
Right. Yeah, because they're not going to be anything for them to buy.
It's going to be a frenzy when
Wow.
rates
Okay.
come down. Okay.
I didn't even think of that. Okay.
So we are seeing families get in, finding a way, get the cosigner, buy it with somebody, like buy the interest rate down,
Right.
Get your foot in the door, and then, the industry professionals do think that we will see rates improve later in 2024, and
Okay.
then we'll take an opportunity of a refinance and bring that rate and payment down.
So this may be a short-term rate for you. You get, like you said, you get your foot in the door, those rates drop, and then now I can make that move to get the better rate, save myself some money.
Exactly.
Okay.
Then you avoid the frenzy, the panic that happens when the
Because
rates
you're
are
in
low.
the house you want.
Yeah.
Yeah,
You
right.
can't even. Then we're back to like possibly, bidding over ask price, right?
Right.
And so, and the reason that although I don't have a crystal ball and I don't know that.
And I appreciate you being honest. Thank
Right.
you I appreciate that.
Yeah, don't buy something and then not be able to refinance next year and come back and
Yeah, don't yell at Michael.
Yeah.
He's saying that's what the hope is, and this is not a for sure thing, but that's what the hope is.
Right, because no matter what, you're going to qualify for the payment now. So even if rates
Right.
didn't come down, you can do it,
And you can stay where you're at.
We're not going to no loan officer is going to put you in a payment that you can't afford if the
Yes.
rate never comes down.
Makes sense.
Okay, so I think that keeping that in mind and knowing that Fannie Mae and Freddie Mac are projecting the appreciation to still exceed 20% over the next 5 years.
Wow. Okay.
So that's
Why getting your foot in the door is so important.
Exactly.
Oh, okay.
So what is that? You buy a $400,000 house. What's that going to be?
Pretty good.
20%.
It's pretty good over 5 years.
Is that $80,000?
Yeah, we're talking about you're talking about a ton of money.
Yeah. So, in trying to time the market, like to wait till those rates come down or if values come down, nobody's good at timing the market.
No.
Have you tried to time the stock market?
Right. It's unpredictable, and don't put yourself in that position. Get with a loan officer, whether it's a Michael or anybody else. Get with them now and start these conversations. So great information there, Mike. Don't wait. If you were looking to buy, there are things to do, as Michael said. So let's go kind of shift gears a little bit and talk about, I have a house and maybe I want to consolidate, but right now I'm sitting on a 3.5, a 4%. I don't want to mess with that. Or maybe I need to do so, or maybe I need to move because I've outgrown my house. Whatever the case may be, if I own a house right now and have a good interest rate, is there anything I can do right now? Is there a movement that we want to do right now, or do you want to kind of stand pat right now?
Well, so that exact point is one of the reasons it's compounding our lack of inventory, is because people don't want to sell their house.
Sure.
And there are families that need to downsize. There are families that need a bigger place. Their family has grown. They need to relocate with job. Like, what if you're you get offered a better job somewhere.
Yeah.
And
Great
you
point.
can't take it because because you can't give up your 3% interest rate and find a home at 7%. Like, that's not good for the economy either.
No. And or you, right? You can't take that job.
Right.
Yeah.
So, so people holding on to these, not wanting to sell their home is adding to the problem because they have this 3 or 4% interest rate. And so something we are seeing families do is if you do qualify for a new purchase, like you have to make the move because people are still buying and selling, even in this environment. And you can qualify, but you just don't like the payment. You can do something that's called a 2-1 rate buy down.
Okay.
And so let's say your rate is 7.5%.
Okay.
You can ask the seller for some concessions and cover the cost difference to bring the effective rate down to 5.5% the first year.
Okay.
So that's 1 year at 5.5%. And I say effective rate because what's happening is the interest rate is still 7.5%, but the seller is putting money up in an escrow account that covers the difference in payment that gives you the effective rate of 5.5%.
Gotcha.
But that's a huge difference in payment.
Absolutely.
I mean,
2%.
Right.
Big time.
1 year so after 1 year, then it goes to 6.5%. And then after that second year, it goes to the 7.5%, the normal regular rate.
Whatever you locked in at that time.
Exactly.
Right.
So what that does is that gives families 2 years of a much lower payment that they're comfortable. And they're doing this because they know that their income's going to be going up, maybe.
Yeah.
Young family.
Sure.
They're doing it to buy them some time until the rates do come down and they do that refinance.
Right. And that was going to be my question. So if I do this what's it called again?
2-1 rate buy down.
If I do this, if let's just say the rates did come down to 6.5 next year or 2 years, I still can refi under that,
yes.
correct? Okay.
Yeah.
Awesome.
No, that's a great question. So you're not locked into it for 2 years. If rates dropped to 3%, they're not going to. Don't think you're going to get 3% again.
Not for a long while, probably.
We probably shouldn't have had those rates. A lot of people, in the industry feel like that was not fiduciary, to take a rate that low.
I think there's a lot of people that would agree with that for sure.
Right.
So
the so if you do the 2-1 rate buy down, it gives you the time, and if you refinance in a year because rates did come down to say 5.5% or something, then the money in that escrow account from the 2-1 rate buy down the seller paid, you get that money. So you haven't lost anything.
Wow.
And you can use that on the refinance.
Okay, nice. Okay. That's a really good program. I mean, it does allow for you to, as you said, there's a tool there for people to use depending on the situation they're in. That's really, really cool. And it feels to me that there's a lot of these tools out there that not a lot of people know about, whether you're a first-time home buyer. I know there's a lot of veteran programs, correct?
Yeah. Absolutely.
So, all these tools kind of combine to be able to give somebody a chance to get into their first home, or as you said, if it's a family needing to size up, down, whatever the case may be, there's a ton of tools out there.
There are, and people, really should realize that the loan officer does not charge anything for a consultation. So if you go speak to a professional, you're not going to be obligated to do anything or pay a fee for their time. Like, you can get a path to buy put together at no cost and just get information. Which
is a great idea, especially if you're in a position where you need that now. I love that. That is a great idea. And as I said, whether it's Michael or anybody else out there, if it's free, go talk to these people, because again, you don't know the tools that are out there that are going to help you buy responsibly, buy the house. And as Michael said, they're never going to put you in a situation where you're going to be, you're going to be struggling. That's not the goal. That doesn't do that doesn't do you any good.
No, I mean, the last thing a bank wants to do is do a foreclosure. They have all the money in the world. They could go buy all the houses if they wanted to. They just want to get paid every month. So it's
and for you want to keep this person as a client. You want to keep a great relationship. You're not going to put somebody in a situation where they're going to be in a bad way.
Absolutely.
It's just not going to happen.
Of course not.
And I think that's the important thing for me here is if you get somebody like Michael who's going to look out for your best interest, who's going to take care of you, who's going to be honest with you too. And I think that's a big thing, being honest. That's what you want to look for in a loan officer, correct?
I think so.
Okay.
Yeah.
Awesome. Well, so obviously, we know where interest rates are. If you're looking to buy, if you're maybe looking to refinance, pull money out, whatever it is, there's options. and I know you said you don't have a crystal ball, and so I'm not really I'm not holding you to this. I'm not trying to put you on the spot. You know, do you see in the next few years here things kind of calming down, things settling in? Like you said, probably 3%. We may never see that again, and as you said, we probably shouldn't. But do you see things kind of calming down in the market a bit?
You know, it would be great if we could get into the 5s again. You know,
okay. Because I think 5 is a good rate. That's really good.
Right. And, you know, unfortunately, no one's going to want to hear this, but
hey, be honest.
You know, there is word throughout the industry. You know, I've heard this from our CEO and other CEO of mortgage banks that we could see 8.5 before it gets better.
Okay.
So, you know, if I needed to move my family and I knew that, there might be a window of opportunity to do something, even though it doesn't, 7.5 doesn't sound like it, but hey.
Yeah, it's better than 8.5 though. And
sure is.
That's the thing. And I was watching something the other day where they're talking about the prime rate possibly hitting 16 at some point. I mean, I think to your point earlier, waiting is not always the best idea because you may get tagged for more later on. And if you're in a situation where you need to do it now, don't wait. Right?
Yeah. I mean, if the rates come down like people are hoping, that some people are projecting the third quarter of 2024. Okay. We could see some improvement. I really hope that happens. Like that's,
but we don't know for sure.
We don't know, but we're
right hoping.
Now, the information we have right now, that is possible.
Okay. But to your point earlier too, let's say that it does happen and we see a little dip, you're going to see a frenzy. And give us that figure again. A 1% drop brings in how many more?
5 million buyers.
5 million buyers. Right. So
now that's nationally.
Nationally,
right, you know,
but still, okay, we can look at the national picture, but you know as well as I do, everybody's moving here. Like Arizona is a place where people are moving to. We're growing still, which is amazing to people like us who grew up driving on I-17 in the 90s and nobody was on the freeway, but you, right? You and me, that was it. We're the only two on the freeway. But I think that's a great point because you're right. When these interest rates when things do calm and settle, you might say, okay, I'm in a great position with the interest rates, but now I can't find a house because there's 20 people bidding for the same house.
Exactly.
And now you're back where you started anyways, because like you said, you talk about people buying over the asking price.
It's actually a worse position to be in than doing something with a higher rate that is temporary.
That's a great point. Right. There you go. I think that to me is what you need to hear. It is a worse position to be in when you're being outbid constantly than saying, I got in at 7.5%, 8%, and now I can go down to 6%, but I got the house I wanted.
Yeah.
Right.
Right.
Okay.
I mean, we had clients that were so mad they were getting 4.5%. You know, because they wanted the 3.5%. You know, it always feels like that.
It does. It does. And you always feel like you missed the boat or something. I was in the same boat in 2008. I'm like, I was waiting. Oh, you know, I'm going to wait. The house is going to keep going up, and then boom, you're in a position where the bubble bursts and. Guess what? You don't have it, and I think in this situation, the bigger question is not, you know, oh, what's my rate going to be? The bigger question is going to be how many people am I going to be bidding against when the rates come down? Right. Because we know how I've talked to tons of people who, you know, years ago were trying to move and they couldn't because they'd get in on a house and a cash buyer would come in and see you later, alligator. That was it. Right. And they, you know, there's nothing you can do. And they're like, we bid on 4 houses in the last 2 months and we can't get the house that we want. That's a bad place to be.
Right. And then, you know, for your listeners, when you briefly touched upon it there when you talked about the prime rate. So it's not just mortgage rates that are high. Like all interest rates are high. Like car loans,
yes,
like those rates are high. Credit card debt is outrageous right now.
It is.
And so, you know, this is part of, you know, the government's plan as they increase the federal funds rate. You know, they want to intentionally slow down the economy. We're starting to feel it.
Yeah, we're starting to feel it.
It's not just the mortgage rates. So right now we have $1 trillion in credit card debt. $1 trillion.
That's a lot.
Right. And
that's ridiculous.
And we have clients coming to us and they are being crushed by this. Like it's a burden. And, you know, when you have credit cards at, you know, 22, 25% interest, and you're trying to make that monthly payment, you're not getting anywhere.
No.
And people have a lot of equity in the home.
Right. Yeah, because home values are staying strong.
Right.
Right.
So they call us and they want to know, what can we do with that equity to, give us some payment relief every month? And the first thing that they say is, I don't want to refinance my mortgage.
Right. I lose my rate. Right.
I don't want to do a cash out refinance and, put my whole loan at 7.5%. So there is a second mortgage that you can get, and you can tap into some of your equity and do like a debt consolidation loan
without touching your
first mortgage.
There you go.
So that's very popular right now.
Okay.
And there are some of them, they're HELOC. People have heard this term, home equity line of credit, which is often a variable rate.
Yeah.
But it allows you to use it like a credit card. You could pay off, consolidate debt, and then you could pay it down. You could use it again.
With like a much lower rate. With a much lower rate.
It's lower
than the credit cards.
Than
the credit cards.
Yes.
Sorry, let me clarify that. With a much lower rate than the credit cards.
Than the credit cards,
yes.
Correct. Yes. And so there is also a fixed rate second too, where rather than it working like a working line of credit, it's one loan that's fixed for 15, 20, or 30 years.
Right.
And that gives you a little bit more security of the rate not being variable.
Yes.
And you can lock in that payment, that amortized payment, and start getting that debt paid down. And the idea there is to have less finance charges than your higher interest rate credit cards, and to improve your monthly cash flow.
Right. All good reasons to do it.
Right. And if the second mortgage does not work because sometimes there is so much consumer debt that actually refinancing from 3.5% to 7.5% still works.
It's still going to save you money
because it just comes down to the math and the cash flow. We had a family that did exactly that. It was like 3.25% rate they were at. First thing out of their mouth is, we don't want to refinance the first. We showed them that going into 7.25% at the time, they were still improving their monthly cash flow by $600 a month.
Wow.
And by doing that refinance and taking the higher rate on their total mortgage, improving that cash flow, they could take that $600 a month that they were saving, and they could knock 10 years off their mortgage.
Oh, by putting it back on the principal.
Yep.
Yeah. That's a great idea. Another great idea. Right. Okay. So obviously Michael's got a lot of experience in this. He's got a lot of great ideas. Michael, before I let you get out of here, if people are interested in talking to you, as you said, you'll consult them for free. There's no obligation. Where can they reach you at?
The easiest way is you can go to my website, which is MikeEngelking.com.
Spell your last name for everybody.
So it's ENGELKING.
Okay.
So MikeEngelking.com, and all of our contact information is there. And if you want a phone number, it's 480-500-3070, 480-500-3070.
Awesome. So thank you for that. And again, if you have questions, if you just want to, say, all right, hey, Michael, I don't know what I want to do. I'm just kind of spitballing here. You'll take the time, you'll work with them, you'll talk with them, and you will guide them whether you're their loan officer forever or not.
Please don't feel like you have to do a transaction with us.
Okay.
If you just want to talk and run some scenarios by me, I'm happy to do that.
Right. He is not, and I want to clarify, he's not here to get your business. He's here to help. He is here. I brought him on the show because of what's going on, and I wanted Peoria residents to know that there's options out there, that you can still buy in Peoria, you could still live in Peoria, refinance. There's things for you to do, and Michael was gracious enough to give us his time to talk about that. So again, if you have questions, reach out to MikeEngelking.com. Correct? And then the number one more time?
480-500-3070.
Right on. So if you have questions, reach out to Mike. And if you need to reach out to the show at What's Up Peoria at peoriaz.gov. I can also give you that information too. So if you have questions, make sure you do that. Michael, thanks so much for coming on today, man. I really appreciate it.
Thanks, Nathaniel. That was fun.
It was great having you. We'll definitely have you back. Hopefully, as rates start to make their move, we can get you back on and in some time here, and we can discuss, what people can do as rates come down. So
I'd love to do that.
Let's keep our fingers crossed that happens. All right. Well, again, my thanks to Michael for coming on. Great information there. Remember to get out to all of these events going on. We got the Monster Bash, we got Gain that's going on tomorrow, and Fall Fest right here at the main library. You do not want to miss Fall Fest. It's always an awesome time. I want to thank all of you for always tuning in. Fantastic audience. Thanks for the feedback. We appreciate it. And I can't wait for October. I got tons of good guests lined up. We're going to have a chef coming in. We have ASU coming back. Just an awesome guest list coming up in October into November. So make sure you are following us and that you are downloading the podcast every week, because you're not going to want to miss the information that we have. So thanks so much for listening. And until next time, this is What's Up Peoria.